Hello everyone, this is Preston Ware over at the mortgage firm. Today I put together a short little video comparing renting versus owning. Buying a home is one of the most important decisions a family can make. It has serious financial and emotional implications and is a major part of the American dream. I've been a mortgage broker, mortgage banker here in South Florida for over 20 years, and I've been helping happy customers get into their homes. And in 20 years, I don't recall anyone ever saying, gee, I'd rather be renting right now. When I get you qualified, we basically touch upon three sections of your background. Your credit, we need to have a 580 middle score or better. I will review your monthly income, your pay stubs and your W-2s and your tax returns. And of course, you do need some savings, whether it's in the bank or maybe a 401k or maybe even a gift from a family member. The advantages of buying a home versus renting are many. The number one that you should be considering is you want to build equity in your investment. Right now we're seeing appreciation of 3 to 6% a year across Florida. In some areas it's even greater. For example, this year in Lake Worth, Florida, they had a 14% appreciation rate. That's 14% on your money. There's also a very large tax break with getting a mortgage. The interest is deductible, and that's a huge itemized deduction that will help you save money on your taxes. We're giving out nothing but fixed rate loans these days, so once you lock into your rate and your loan and your house, you know that that principal and interest payment will never change. Yes, your insurance and your taxes may adjust slightly, but nothing like the negative exposure you have when you have a landlord that feels like jacking up your rent. About the only disadvantage of owning your own home is you have to deal with the maintenance yourself. And for whatever reason, many lazy renters like to have the landlord fix things, but that's really the only advantage. And quite often I hear horror stories about lazy landlords or inattentive landlords that don't really do their job. This is a neat little graph that talks about the financial impact of renting versus owning. If you rent, let's say you're spending $1,100 a month, in 5 years you've spent $67,800. If you have a loan of about $160 at an interest rate of 4 1/4, which is actually higher than we have today, you'll have a payment of about $1,112. And not only will you save money, you'll save a lot of money. The difference of these two scenarios over 5 years is the guy who bought that house has a $77,000 positive cash flow compared to the guy who is just paying rent. The company I work for is called the Mortgage Firm. We've been around for 20 years. We are a mortgage bank. We don't offer CDs or checking accounts or things like that. We do nothing but mortgages. We do about 500 loans a month for about $100 million worth of loans every single month. We do mortgages and get them done on time. Everything is processed internally. We're talking about residential loans, Fannie Mae, Freddie Mac, FHA, VA, USDA, and Jumbo. Once again, my name, Preston Ware. You can reach me at 561-329-0075. Preston@PrestonWare.com is my email, and my website is my name, PrestonWare.com. Please feel free to call or email with any questions that you may have. Thank you.